Have you ever wondered why your trading strategy will work for 1 month, but the next month it feels like it completely falls apart? You then try and convince yourself it's just your edge playing out. But the reality is there is an instinct there where you feel like something is wrong and that you shouldn't just keep placing trades just for the sheer sake of it. Guys, I've been doing this for a very long time. My name's Mark Hutchinson. I've been trading for 18 years. I've built my own fund to over 10 million and I've mentored thousands of students in over 150 countries. And in this video, I'm going to expose to you how so many traders are just chasing these concepts that simply don't work anymore. Not only is it going to lose you money, it's going to distract you away from the bigger picture, which is making sure that you have an incredible year next year. So if you're someone who doesn't want to just fall into these traps because you feel like you don't want to let go of the work that you've done thus far, then you're going to want to listen to this video. So before we get into this episode, I wanted to let you know that I'm actually hosting a free event on Monday, the 10th of November at 6:30 p.m. UK time. This is going to be about hybrid trading. I'm going to show you everything as to why you need to be hybrid trading to be ahead of the curve. Long gone are the days where you could just focus on one asset class or one pair. You're going to be at a huge disadvantage. I'm never going to do this again. It's a one only. I would love to see you there. So there's a few things that we're going to cover. Most importantly, why are these trading strategies collapsing right in front of our eyes? I'm also going to go into how to trade one pair. Should you, shouldn't you, pros and cons. I'm going to give you some insights into the more lower time frame world, if you like, whether it's SMC, etc., and how it could be really hindering your progression. We're also going to be talking about the real reasons why these traders are being manipulated. So whether you believe in algorithms or not, as to how it is designed for you to fail. So the very thing that you think was giving you your edge is now your trap. And last but not least, we're going to be talking about the hybrid trading, the actual solution to all of these new issues. And I say new issues for a reason, because it is. Some strategies were great for a period of time, but we can't live in the past as to what was good in 2020 or 2021. We have to go for the here and now, and that's exactly what you need to know about. And to not know about hybrid trading is going to leave you so far behind in 2026. We have already seen this in our community. People that are doing hybrid trading, they're already decreasing their drawdown. They're massively improving their strike rate, but they're not forcing positions. So I'm going to cover all of that. I actually think this is one of these videos that you're going to come back to in very many years and go, that was it. That was the moment. That was the clicking thing for me. This video is going to be historic. So I highly recommend you set some time aside and you really listen to this the whole way through. Right, so we're going to get into it and we're going to cover a few things. So I've got 3 pairs here. I've got Kiwi yen, pound dollar, euro dollar. I get, like I said, I get why the appeal of just specializing in one pair sounds kind of cool. But the reality is that is insinuating the market's always the same. And you guys know that it's not. So then what are you going to reach? You're going to reach certain situations where you are forcing positions or you have no choice. Like, I'll give you an example, right? So you've got euro dollar here, pound dollar here. We'll go same date. Now, let's say you're looking for a sell on euro dollar and you're looking for this to reject here, supply, demand, fair value gap, whatever it is, right? Liquidity sweep, sweep of the high. You could even be an EMA trader, like whatever the reasons you have for entering a trade, you're looking for euro dollar short. But you specialize in euro dollar, so this is all you got. So prime London session, you're taking a trade. You end up probably taking a loss because of spread, because generally speaking from what I've seen as well. Bearing in mind, I'm having to cover this now because of the amount of people that are, the more and more I'm learning about it, I'm realizing these people with super tight stop losses, they're set up to fail. They don't factor in the higher time frame. They're not zooming out. And you're gaining such a lack of an edge. They don't have a choice, because they'll show me a situation like this where I'd go, why would you choose euro dollar? Because at this point, I'm not choosing to trade euro dollar over pound dollar or pound dollar over euro dollar in that sense. I'm trading the dollar. So it doesn't, I don't care whether it's pound dollar or euro dollar. What I care about is which trade is going to give me a better setup. But if I don't have that option, well, I'm stuck on this. I'm like, right, okay. Technically, I'm looking at the right area. The delivery of it, let's say I stay in the trade for whatever reason to there, and then it comes back up, right? The delivery of it is awful. So I'm correct on the delivery, but the chances are I take a loss or a break even on that trade. So this is Tuesday around 7 a.m. So prime London session, and then we go pound dollar, same thing. Pound dollar right here, and many of us took this position, right? So you've got pound dollar here for the shorts, doing the exact same thing. And this is way better position. The delivery of it is perfect. I say perfect, but you know what I mean. Even if you was in and out for 5-1, if you was holding for the bigger trade for the daily low, then you've got pretty much a 10-1. So you have different variations of the trade. But what you'll come to realize is, imagine in that moment, all I could look at is euro dollar. And you could say to me, Mark, well, couldn't the reverse happen where if you had euro dollar and you took that instead of pound dollar, maybe pound dollar didn't deliver correctly and you would have taken a loss or a break even and euro dollar worked? Yeah, that's fine as a one-off. But if I'm only stuck on pound dollar, for example, and that's all I've got to do, it's going to reach a point in which it's horrendous, where I can look at that side by side and give you the exact reason as to why. Look, euro dollar, look how bullish it is. So you've got a lot more bullish pressure, but more importantly, look at the 4-hour, look at the squeeze. So this is a big corrective squeeze back to an area where you not just have this area, you also have this area right here. You also have this area right here. So you could be stuck in no man's land and it could just trickle up more and more. There's much more risk attached to the delivery of how this is going to work out versus pound dollar. Let's take a look at that. You get a much clearer positioning. So what do? We've already broken the highs. We've failed at this structure because the volume was here. We've tapped it. We've sold off. We've left a really clear hook point after the origin of that move, because you get this corrective squeeze, the sell-off, the move back up, and then what you start to see is the clear gaps in price of a larger 1-hour structure. This is like textbook Falcon setup. So if I just remove the zone and I just even put it in as a line like this, it's so obvious that you've got this high is above that low, so not important to us. What do? We get a move off, and then that's the origin of that move. We sell off, we start to break these lows, we come up, we test it once, okay, great. We sell off, we come up again, and we leave a gap, brilliant. So now we want that gap to be filled. We come back up, we get our rejections, and then we're in. And there's other variables to it as well. But this as an isolated setup, if I'm looking at euro dollar, and I was side by side, the confluences that pound dollar has over euro dollar, even the most basic trader in Falcon would be able to go, yeah, I'm going for pound dollar over euro dollar for this reason, like black and white. Yeah, so imagine I couldn't do that and I was just stuck on euro dollar. What options would I have? I'd be like, well, I have to take it now. So if you're someone who's found yourself in a position like that, where you feel like you got forced to take the trade because you're not going to be able to go, well, I just won't take a trade this week, because you'll get to a point where it's like 3 weeks, you've not taken a trade because the conditions are not favorable. And then before you know it, you're doing nothing. So then you end up forcing low quality positions. It's a slippery slope. And then if I just go Kiwi yen, right, and we look at euro dollar. So right here. So this is Monday. You're looking to take a trade. Euro dollar's been selling off. Maybe you've missed a couple of positions and you decide you want to, I don't know, let's say you're not a London session trader, you're trading New York session. So you've had this session's been done and now you're trading New York session and you've got this little structure right here. This is so poorly positioned, by the way. Like the chances of this being a loss is so high for so many reasons. But let's say you end up being lucky and take a break even on it. So if I only had euro dollar, I'm back in the same boat where it's New York session, I'm looking to get involved in the market and this is what I've got to work with. Or it could be London session, like same thing. But then meanwhile, London session, I'm looking at Kiwi yen. Like even if you just go side by side, right? Because I spoke about New York session here. So where are we at? 7, we're right there. Let's go 5 minute. So you could make a mini argument for, to be honest, that didn't even get to the entry. But let's say you tried to trade it earlier. You've got somewhat of a trade, right? Not the biggest of trade, but then at the same time, if I go to the 1 hour time frame, you've had all of this selling. Look at where we are to the left. If I just look there, you're taking a trade on euro dollar right on the low. This can just be accumulation. This can be big profit taking from the higher time frame. That's the point I'm making. You're not even considering the higher time frame. You're so poorly positioned at this point. Look at euro dollar in isolation. You might go, oh, that looks kind of similar to what you just showed me. Now look at it. Look at where we are. Look how long we've been selling. There's the top of the run. Now let me show you Kiwi yen. Where are we on my position? The equivalent would be, where I'm taking Kiwi yen, would be the equivalent of me taking euro dollar, like right up here. Look at the difference. That takes 5 seconds to work out, hey, I'm poorly positioned on euro dollar. Kiwi yen has the exact same setup that has more confluence. Guess what one I'm going to take? And there were so many variations of the trade. I'll get into hybrid trading in a second, but there were so many variations of the trade. This was a simple 3-to-1, and I could have banked a lot more. And some people did because they held it for longer for different reasons. And some people got out for 3-to-1 because they were doing the prop firm model that we've got in funding mechanics that teaches you how to get more consistent payouts, more consistent withdrawals, way more efficiently without getting payout denials, etc., etc. You'll keep blowing funded accounts until you stop thinking like a broke trader. Most traders are not failing because they lack the skill to trade. They're failing because they've fallen for the prop firm illusion. You chase payouts, you pass one challenge, and then you blow the next. Even if you were fortunate enough to get a 4K payout, you'll just blow it the next month anyway. The truth is, the system is designed this way. You are not rewarded for being consistent. You're rewarded for taking reckless risks. It's a proven system to help you protect your capital, extend your time in the markets, and help you scale up your capital sustainably. This isn't just about you getting funded once. This is about you staying funded. This is about you getting funded for life. It's time for you to stop gambling. It's time for you to start trading properly and scale up that capital. All you need to do is join Falcon before the 28th of October and you will secure the lifetime pricing. This is the legacy pricing, and on top of that, you won't pay anything for funding mechanics. That will also be included completely free. The sheer fact that you get funding mechanics for free is a drop in the ocean. There is almost zero risk. There is more risk in you not having funding mechanics than you just staying exactly where you are, not scaling up, and getting into this trap where you're losing money hand over fist. Get involved. This is going to be a game changer. You're either going to hear people talk about it in months to come, how this changed the game, and you had an opportunity to get it, or you're going to sit there in the same position saying, Mark, I'm down another 2K in funding, still in the same place, fed up. You have an opportunity to make a good decision. What I'm saying is, surely that you can see now, where do you gain an advantage if you're trading through like a horrible squeeze? What if euro dollar was that at that point? You've literally got to go either don't trade for 2 weeks and let the market settle, which most people just don't do because they've got timelines to hit. Like nobody wants to get rich slow. Like they've got numbers to tick off. They've got a phase 2 to achieve. They've got evaluations they're going through. So there's going to be the part of that pressure of people moving forward. I've not placed a trade for ages, or this is going to expire, or I need to put on a trade, whatever the reason is. And you find yourself in a situation where you're actually no longer trading, you're gambling, but you're using trading as a disguise. And you think you're using your strategy, but really you're finding any and every reason to be able to enter into the market because, I mean, you're always going to find one if you're in the lower time frames. If I camped out on the 5 minute and only done that, yeah, I would find trades every day as well. But it's about understanding. It's not, you don't become profitable in the trades that you take. You become profitable in the trades that you learn how to stay out of. And you can only do that if you have a higher time frame narrative that is backed and tested over at least 10 years of data. Now, I'm working with over 30 years of data. So the probability of this failing is almost like 0.1%. That gives me a lot of confidence. It's the reason why we've built our fund up to over 10 million. It's the reason why our traders are consistently leveling up. So yes, you won't see them with 5 pip stop losses. And even though that's still possible with the strategy that we have, there is so much consistency here and there's not those awful swings of drawdown. I've not even got into the sheer fact of letting your winners run. Like, that's another thing that a lot of scalping traders get wrong. Like, why is it, if you actually look at the data, look at swing trading versus scalpers, who's going to be more profitable? Swing trading, hands down. Like, that's just the data. And then you look at, people ask me, say, Mark, are you a swing trader or are you a scalper? And because you might be saying, Mark, this hybrid trading, if this hybrid trading is new, so to speak, why didn't you tell me this in the past? I've always been hybrid trading, just never said it that way. I've always been taking different type of entries. This has always been around. You go back in the content for the last 9 years, it has always been there. So it's, the strategy was already built so robustly, we could take advantage of these scenarios where other strategies can't. So I actually really feel for people that think the only way is being stuck on a lower time frame and just being in one session because they were brainwashed and sold on this idea that it sounds cool, it sounds easy. Who would want to be in the market for any longer than what they need to be? Like if I'm saying like, hey, here's a strategy and you could be in this trade for 4 hours and someone says, hey, take this with a 3 pip stop loss, you'll be in and out in 15 minutes. Who's going to be more interested? You're going to go, yeah, of course, 15 minutes, that sounds great. But what sounds great versus what actually works over long term, completely different thing. So again, that's just a bit of a glimpse into it. Hybrid trading is going to be the new thing. If I actually think about Falcon 2017, for those of you that have been following the channel, for those of you who will remember, you can go back. Falcon were the ones that pioneered clean charts without all the garbage junk indicators all over the screen. Never forget that. And to be naive and think that we're not ahead of the curve, to be naive and think that we've not been building something robust over these years, that we're about to come out with something that is going to wipe the floor with most strategies. You can either get on board with it or you can be completely left behind, and you'll see the results. You'll see the success. You'll see our fund go from plus 10, 11 up into 20 and 30, and they'll reach a point where you go, do you know what? Enough is enough. I need something that is more tested. Do you really think we could get here to 9 years by accident or by chance? You think we built up a fund of 10 million just by fluke? It can't happen unless the system is robust enough.